Hello everyone, my name is Vedant and welcome to Markets Daily, a daily stock market insights and analysis podcast by Bajaj Broking. Our mission is always to bring our listeners, that's you, the daily financial news and advice that you will need before the markets open so that you can make the best decisions when it comes to improving your finances. We have absolutely no idea what the future holds, but we can't wait to bring it to you every morning as the markets open. And along with this program, if you require any more information, please do visit www.bajajbroking.in. Starting with the news today, both India and the US have released their CPI data between the conclusion of our last episode and today morning. Let's get into the numbers. For India's CPI year-on-year for February, the actual percentage was 5.09% versus a forecasted 5.10% and a previous estimate of 5.04%. With regard to India's industrial production year-on-year for January, the actual percentage was 3.8% versus a forecasted 3.8% and a previous estimate of 4.1%. For the US CPI data year-on-year, the actual percentage was 3.2% against a forecasted 3.1% and a previous estimate of 3.1%. The US core CPI year-on-year's actual percentage was 3.8% versus the forecasted 3.7% and a previous estimate of 3.9%. The US core CPI month-on-month actual percentage was 0.4% versus a forecasted 0.3% against a previous estimate of 0.4%. And lastly, US CPI month-on-month actual percentage was 0.4% against a forecasted 0.4% with a previous estimate of 0.3%. And shifting to other news, British American Tobacco, the largest shareholder in ITC, has planned to offload as much as 3.5% of their stake for 16,775 crore rupees. The London-based Lucky Strike cigarettes maker is planning to use the net proceeds for repurchasing its own shares, which are available at huge discounts with respect to India's holding. Moving on, amid rising concern over a brewing bubble in small and mid-cap stocks, ICICI Prudential Asset Management Company has stopped lump sum investment mid and small cap schemes. It has also restricted fresh SIPs and STPs to 2 lakh rupees per month from March 14th. The decision to temporarily discontinue subscriptions in the schemes has been taken by the trustees, keeping the interests of the investors protected from sudden market movements. Next up, market watchdog SEBI on Tuesday ordered Vedanta India Limited, earlier known as Cairn India Limited, to pay Cairn UK Holdings 77.62 crore rupees plus a simple interest of 18% per annum for delayed payment of dividends. Additionally, the Securities and Exchange Board of India has asked the company's chairman and managing director Naveen Agarwal, whole-time director Tarun Jain, whole-time director and chief executive officer Thomas Albanese, and whole-time director and chief financial officer G.R. Arun Kumar to refrain from accessing the security markets for a period of 2 months. Next, Adani Group company Ambuja Cements Limited, which recently acquired Sanghi Cements, will sell up to 2% equity in the company in a bid to ensure compliance with minimum public shareholding norms. The total equity amounts to 51.66 lakh shares, and in a regulatory filing, Ambuja Cements said it will sell the 2% equity in the open market from March 13, 2024 till February 6, 2025, or the actual date of the completion of the sale of the shares. The remaining part, which is 57 lakh equity shares of the promoter group, which is about 2.23% of the company, were acquired separately. And lastly, FII's net buy 73.12 crore rupees and DII's net buy 2,358.18 crore rupees in equities yesterday. It seems like it has been a busy 24 hours for business. Let's see how the markets may have been impacted. For the global market insights, the S&P 500 closed at a record high Tuesday as US stocks took a hotter than expected inflation report in stride, underpinned by fresh bullish bets in tech. The consumer price index rose 0.4% last month amid higher costs for gasoline and shelter, according to the Labor Department, matching the estimate of economists polled by Reuters after climbing 0.3% in January. In the 12 months through February, the CPI increased by 3.2%, just above the 3.1% estimate after advancing 3.1% through January. So what does this look like in numbers and basis points? The benchmark S&P 500 climbed 1.1% to a record close of 5,173.97 points. The tech-heavy Nasdaq Composite gained 1.5%, and the blue-chip Dow Jones Industrial Average jumped 235 points or 0.6%. It seems to be a good day for tech in the US as well, as Oracle Corporation surged nearly 12% after reporting stronger than expected quarterly earnings on increased demand for its AI offerings. Nvidia Corporation jumped more than 7%, lifting the broader chip sector more than 3% higher, while mega cap tech, including Alphabet Incorporated, Class A Microsoft Corporation, and Meta Platforms Incorporated, were also in the ascendancy. Market expectations for the timing of the Fed's first rate cut remained largely unchanged, clocking in a 69.8% chance of a cut of at least 25 basis points in June. This is all according to CME's FedWatch tool. This is down from a 71.7% chance in the prior session. Focus now for investors and economists turns to more cues on inflation from producer price index data that is due later this week, while retail sales data for February is also set to offer more signals on the strength of consumer spending. Asia-Pacific markets also rose after Wall Street jumped overnight, following US inflation data that largely met expectations. Japan's Nikkei 225 rose 0.73% in early trade, while the broad-based topics gained 0.79%. South Korea's Kospi climbed 0.48%, and the small-cap Kosdaq was up 0.1%, on pace for a fourth day of gains. But moving from overseas into our own borders, for the Nifty previous day outlook, benchmark indices in India traded in a range with high volatility and closed the session on a flat note ahead of crucial inflation figures from the US and India. Nifty witnessed wild moments throughout the session and finally closed at 22,335 levels. The highest call OI addition has been observed at the 22,500 level mark, which will serve as an immediate resistance and seems difficult to surpass. However, if the price does surpass and sustain above the 22,500 level, short covering could become likely. Across the strikes above the 22,500 level, call writers seem to be aggressive, indicating that there is in fact multiple resistances. On the other hand, major put OI addition has shifted towards the 22,000 level, which is an interesting point to note. Immediate put OI addition has also been placed at the 22,300 level, which will act as a crucial support zone. According to option chain analysis, put writers have shifted their position downwards, indicating caution towards any correction in the index. However, if the price breaches and holds below the 22,300 level, a correction may drag towards the 22,000 level. The Nifty put-call ratio has increased by 0.01 and now stands at 0.95. A 3.3% rise in open interest, accompanied by a 0.1% increase in price, was observed in Nifty futures, indicating potential long build-up. Shifting to the Bank Nifty, the index also traded with high volatility and closed the session marginally lower at 47,282 levels, down by 0.1%. The highest call OI addition has been positioned at the 48,000 level, while the immediate call OI is noticed at the 47,500 level, likely to act as resistance for the weekly expiry. However, surpassing and sustaining above the 47,500 level may trigger a short covering move. On the flip side, major put OI addition has been placed at the 47,000 level, likely to serve as a crucial support level. If the price breaches and sustains below the 47,000 level, a loss of momentum could be likely and may drag towards the 46,500 level. According to option chain analysis, Bank Nifty's immediate range for the day is between 47,000 and 47,500 levels. A significant movement could be anticipated on either side of the range break. And in Bank Nifty futures, there was a 5.2% rise in open interest, accompanied by a 0.1% uptick in price, indicating fresh long positions. The broader market continues to witness sharp decline for the second session in a row as the Nifty mid-cap and small-cap closed down by 1.41 and 1.98% respectively. So what does this look like on the daily time scale? Well, the index has formed a doji candle with long shadows in either direction, signaling consolidation amid high volatility. The index in the last two sessions has been witnessing corrective decline after a recent strong up move of more than 650 points in just 7 sessions. And with that, let's move to the last little bit of information about the Indian benchmark indices today, and that is, of course, the intraday levels. For the Nifty, intraday resistance is situated at 22,390 levels, followed by 22,450 levels. Conversely, downside support is located at 22,300 levels, followed by 22,240 levels. For the Bank Nifty, intraday resistance is positioned at 47,570 levels, followed by 47,820 levels, while downside support is found at 47,050 levels, followed by 46,830 levels. And lastly, for the Fin Nifty, intraday resistance is positioned at 20,970 levels, followed by 21,050 levels, while downside support is found at 20,830 levels, followed by 20,750 levels. So we have talked a lot about the equities market, so let's shift gears for a second and move into the other asset classes. US Treasury yields also advanced after the data, with the yield on benchmark 10-year notes up 4.9 basis points to 4.153% after reaching a session high of 4.172%, following a soft auction of $39 billion by the Treasury. The dollar also strengthened after the inflation data, with the dollar index gaining 0.17% to close at 102.96 basis points. US crude settled down 0.47% to $77.56 a barrel, and Brent settled down 0.35% to close at $81.92 per barrel, as the market weighed the inflation data and a higher than expected forecast for US crude oil production. And lastly, gold traded down 1.3% to close at $2,159.60 in valuation amid strong inflation data in the US. And with that, we have reached the end of today's episode. We need to start getting ready for the markets opening, as I'm sure you all will be too. As always, I hope you all have gotten something meaningful out of today's program. And as mentioned before, for more information, please visit www.bajajbroking.in. This podcast was made possible by the good people at Bajaj Broking, and we can't wait to bring more financial news and analysis to you when we return tomorrow morning. Cheers, everyone.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.